I hope you're all doing well. Beautiful, beautiful Thursday over here. Calm, cool, and collected. There's no question about that. CTM continues to run smoother than ever. However you want to view the market, whether you call it a bull market, whether you call it a bear market, that's all irrelevant. We just want to make sure that we stay in front of it and ride these waves as they come. Some things that I want to talk about today, specifically as we see this new entry occurring on the Bitcoin, is talking about, if you remember back in late June, we started talking about the potential adjustment, something that could take what we have, something that's already absolutely beautiful, and then see if we can improve upon it. I want to start off though by getting into the charts. We'll start off with the Nasdaq over here. As we looked at it yesterday, we were waiting to see if price could, after first breaking above this resistance here and then confirming it to support and then breaking out again right before the CPI coming in and then testing. Look where and follow my mouse. You can see it testing that local support, confirming it. And then we were waiting to see if it resumed up. It indeed made a higher high, resuming up. And you could see that's now being tested. Here's a beautiful view of that. If you look at this view, this channel on the log, right? I'm going to zoom in over here. And you could see what's taking place is a breakout, right? There's a first retest, a resumption up. And then here we go. First couple of hours trading this morning in New York. You could see a retest of the channel, that broken resistance, and we're trying to see if it could be confirmed into support. If it does, and if we see any type of resumption out of this descending channel over here, that could be pretty big. My wonder, my guess, and we've talked about, and we get to talk about it from our position of strength, how this is one of the most hated, one of the most disliked bear market rallies. And that is because the professionals, they're not participating. They were late, right? They're very late. This was retail driven or retail squeeze. And this could go potentially much further. Now we have Jackson Hole Symposium at the end of this month. And then we have really in September. September is going to say a lot. We have that next month CPI reading. I personally, we've been pretty good about having our pulse on this, and that has a lot also to do with our reading all signs, including when the White House the day before gives any type of heads up. We were aware of that last month, and sure enough, within 24 hours, the White House said, "Up, this month's CPI is going to be elevated." And then this week it was silence. There was no mention, sure enough, coming in under the numbers. But I do expect that the next month's CPI to also come in soft. The reason I say that is because it's a bit of a lagging. We've been watching food and energy. Food and energy prices coming off is largely why this current CPI came in soft. I expect that next month is even softer. What happens after that? What happens? We have to be watching prices. We have to be watching the markets. Again, the market can all change rapidly. Right on time. Glad you're here with us, right? Beautiful. Good morning. I'm happy that you all are here. It is good that you're here. CTM, I am so proud of you all. What we are doing together is absolutely beautiful. Let's jump back in over to taking a look at the S&P 500. And we've talked about just getting that feel, right? If you ever have played any sports, if you played golf, you know that if you only play golf once every few months or once a year, you have no feel, right? What is feel? It's that touch from playing something consistently. Same thing in the markets. When you are putting in the work each and every day, you begin to get a feel, right? And one of the ways we could express that is here on the S&P 500. We were talking about how we were starting to see the relative strength actually improving on the S&P 500 over the Nasdaq. You could see as the similar situation occurred, the break of above resistance, the retest, and then resumption up before the CPI, coming back in for another test, and now extending above. Look how far the S&P has resumed above its last local peak, and the difference here that you could see on the Nasdaq. You see S&P showing that relative strength right now. Now, we have to always be worried about our risk, always about our downside. let's just go ahead here on the S&P 500 and make a few different observations. First of all, being that it's above this last June peak over here before that rally was sold and sold hard. A lot of people yesterday, they were almost indignant about the markets acting favorably to a 8.5% CPI print year over year. I think they forget that last month's CPI print, 9.1, was a lot hotter, a lot stronger, and that's what set off this market rally. We, in real time, watching that price action, remember we had that little fake liquidity grab that occurred on that break of that support on Bitcoin and then that resumption off of it. We talked about what was happening here is that most likely the markets were pricing in that being the hottest print for the near term, potentially even turning into the intermediate term. I do believe inflation's sticky because we're tracking this year over year. Going forward, the numbers are going to seem to improve. It's not that prices are going to be coming down, but it's being tracked year over year. Eventually, I expect inflation to surpass these current levels. When that will be, I have no idea. Most likely it's going to come sometime after the Fed's next expansion of their balance sheet. And there will be, I do believe, further expansions is the only way to keep this house of cards going. I'm looking right now for our risk, right? So I'm looking where this might be signs that we are seeing actually a bear market rally being sold. Where to sell the rip come in. Now, right now, as we're looking at in the first way that we're basing this off of the macro, and it seems that we kind of have the all clear. By the way, speaking of the macro, this morning we had initial jobless claims and showing for the first time an increase, a rise in initial jobless claims. This again is going to potentially give the Fed a little bit of cover if they're going to indeed continue to pivot. In the way I define the Fed pivoting is the Fed moving towards a pause. I have such a passion for the macro. I love to share it with you and talk about it with you. One of the most interesting things that I want to talk about, this beautiful thread from Sven this morning. If we have a chance today, I will do it with you. Otherwise, I'll just keep it queued up to talk about with you at another time. Now, as we're seeing the initial claims jump up over here, it doesn't really make sense that we're seeing, as we know last Friday's very hot jobs numbers, and you're continuing to see that climb up, but then you're seeing jobless claims coming off. This seems to say what's going on over here. The numbers are not adding up, but what we're looking at, whether or not the markets are manipulated, everyone here knows that the markets are manipulated. We just had, I forget where it was from, so I don't want to say, but we just saw someone found guilty of manipulating the gold market once again through spoofing. And we know that the markets are manipulated. It's our job to be able to work within that manipulation, whether or not, because we have midterm elections coming up, we're seeing some type of manipulation of numbers. That's neither here nor there. It's our job to maneuver within it all, but we should see some type of snap back over here. And I imagine, because we're looking at, if you look at this trend of corporate layoffs, as rates are rising over here, you could see layoffs continuing to grow. I do expect that's a trend that's going to continue throughout the rest of the year into 2023. And I think that the snapback is going to be this way. Could it potentially be this way? For sure it can. We'll continue to watch and monitor everything together. I want to get back into the price action, so I'm going to jump over here with you all. By the way, inflation, sticky. My family goes through roughly 50 eggs a week, 200 a month. We have 6 kids. I know very well how much the price has risen over the last year as I do the shopping. The official data on eggs is 47%. Unfortunately, because of health issues, we also have to buy those pasteurized, blah, 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 blah eggs. They're not cheap. I'm buying chickens. It's beautiful. It's the way it is. We got to adapt, right? Jen, I just love the macro too, and I love talking about the macro with all of you. I'm excited for touching on a lot of topics today, specifically on some price action, and I hope that we get into that as well. The only thing is that I'm not prepared to discuss it. So I want to make sure that we continue the flow. The first thing that I want to do over here as we go forward, move forward this morning, is talk about where we might be seeing any potential sell the rips beginning, as you all know, are familiar with. Let me zoom in over here. And that is when we had that March Fed meeting. This is right after the Russian invasion of the Ukraine. And then we saw, right, what do we call it? Sell the rumor, buy the invasion. And why there was a nice rally. Notice that it even took out these highs over here. That was quickly and rapidly sold very quickly. Again, I feel it's like something that I was late on. I'm always looking to improve, which is why I'm spending so much time and focusing in on it. And now we're again at a point where this rally has gone a little bit further than a lot of market participants. You've seen that this rally of higher highs and higher lows by those that kept their bearish bias, they kept selling into it. And then now over this last week, a lot of them are like, well, I'm just going to be quiet now. And, look, it's fun to participate on both sides. We've seen that in the cryptocurrency this year, especially above all on Ethereum, huge gains on the short side, and now also tremendous gains on the upside. Are we doing something as simple? I don't think so. You can tell by my tone. Are we doing something as simple as like, you can see that was over here pre-CPI, first sell impulse, double black diamond, or is that conservative? Either which way that was faded. Are you readdressing it like this? I'm not. What I think that we need to do is remember, first of all, that the markets prior to that CPI reading, they retested that local support, confirming it. I'm going to extend this line out. As long as we're above that line, that low prior to the CPI, I would say the market structure is very, very healthy and very bullish indeed. Now, at any point in time, that can change. There's just no reason for it to change right now. What I'm doing is I'm then moving up over here, that support to be in line with there. I'll keep that highlighted for now, just so that we remember. And then again, getting below, that's the first area of support, a little bit of support below that. This will be a huge warning sign that the structure is breaking down. Below here, I would say that we are rolling over. So we got a lot of room to play with right now. On the Nasdaq, I just wanted to point out one thing. It's just of interest, right? Are we going to be able to, over the next, just call it 4 or 5 weeks, put in any type of tremendous rally that catches a lot of people off sides? Most participants are already off sides. How far does that continue? Look, it's of note that we're trading above the March low right now. And then you could see that's where the CPI pre-CPI low came in. We're now resuming above. We're above that March low. I'm wondering, this might really hurt the most. Is it potentially possible we take out that rip that occurred all the way into the beginning of April, and then that was sold quickly and rapidly? That would really take out a lot of people. You can see here's an instance, the prior swing high taken out before the rip. That's something that we have to watch out for. I feel like, and I'm just throwing it out there, I'm willing to change and involve my thought process and opinion on a day-to-day basis. It's why we continue just to be in front of the charts and put our work in. If we do see any type of move into that area, I would expect that's where a lot of bears capitulate. That's where I would get really concerned that potentially we are getting towards a very dangerous place. And there's nothing, just because I'm looking up here and telling you some future thoughts, that's not to say that we're going there. We're watching our bottom side, right? And our bottom side right now is going to be, again, taking out that pre-CPI low. That would signal that, you know what, the market had every reason to continue its rally. It's not. Regardless of whatever thoughts and or opinions are, you got to pay attention to price and stay in front of it. I talked about earlier in this session that one of the things that could potentially be a wild card of concern would be to see crude oil returning towards its highs. So we got to take a look at oil, right? I'm pulling up this chart first. Now, I know that looks funny. It's okay. It looks funny because those that have been following know we've given her a best. I'll remove these things and explain to you what exactly I'm doing over here. And, right, what I was doing over here is first, I was adjusting this trend line, trying to get a prime trend line as best I could, knowing that it touched off these two areas. By the way, fantastic job we did at the very top. Fantastic job we did off the continuation, and then it got fuzzy. Remember that we were watching this line over here for closes on a weekly basis. I'll come back to that in 1 second. And then I also want to move over to these charts over here from Hamid, who this morning I was looking to try to get my bearings for a chart on oil. In that same time, I was able to also see a chart on the 10-year that he shared. I want to go over and touch on both of those with you. The first thing that I want to do, though, is continue where we are over here. And what I'm doing is then this is the touch over here, the touch over here. And then although price peaked out above here on a daily basis, it didn't close above there. Again, that line is in play. Here it's in play not as resistance, but as support. So I felt like this could be a prime trend line, trying to find out when this sell impulse that we've been seeing is being faded, right? So I did a one-touch CTM style, right? One-touch clone trend line off of this point over here. Price potentially even breaking out over here today on this session. We'll be watching that. And this was just me lining this up, right? First off this point, and then you could see the other two touches, 3 touches. That was confirming for me that I do have indeed a prime trend line to be looking at. This was nothing more than an auto clone, and this is where I'm basing it off right now. We could actually be getting a breakout right now. I want to look at horizontal resistance with you as well right now. So that's the first thing I'm looking at. The second thing I'm looking at over here on the weekly basis, let me just go over to the weekly chart with you, is just noting, right? Ever since the invasion, we did not have, here you go see the invasion, we did not have any weekly closes above this trend line over here. I should be able to highlight it a bit better, but you know, that trend line over there. And then all of a sudden, we finally, remember this one? We had that big, massive candle down, but price didn't close below it. And then we've had closes below since. Is that something that we wait for price to get above to say that, all right, price has resumed its uptrend and could be taking out its yearly highs? I think that's very late. Well, for us, it's very late. It could be a longer term confirmation, but for us, that's pretty late. We want to see what's immediate before us. Is this clone trend line here a breakout above, right? That's a lot of space between here and here. Is that signaling to us a breakout above this trend line, this clone trend line over here, that we are entering more of a range bound market? Zoom out, right? Is it possible here that we range in here for a while? That makes a lot of sense. It's never straight up, straight down. And then I want to look at Hamid's chart over here. It's beautiful work that he has. I love his TA, his trading style, which is why when I was looking for my bearings this morning on oil, I went to his feed and you could see this beautiful trend line. I'm working solely off his chart. I hope that you could see it. Let me try to highlight where my mouse is right over here. I'm looking at this touch. Now I'm looking at this touch, right? After that breakout occurred, it was retested and then resumed off. And then we've since broken below this. Okay, so is that resistance on the way up? That area is coming in, that number's coming in right around, let's call it 95. All right, so we'll look at that in a chart in a second. Keep that in mind. And when we broke down, how far down did we come? We have here about, I'm going to think about like eyeballing it about 87, right around there. Yeah, right around there is where we came into that trend line that he has coming off of the March 2020 low, closing on the weekly basis. You can see that beautiful touch. Here's where you set the trend line off of, and then it was affirmed over here as well. So far, that is where price has found support. That's pretty significant. And now, so listen, that's a great line for us. A breakdown below there at any point, that would signal that we're having a continuation of this down move. I think that the target most likely then would be this blue line over here. Be watching out for that. And then as far as an uptrend, if price came down and tested this support, when does the uptrend start? I'm not going to draw in this type of line. The angle is so steep. Now that could be, as we just talked about, using this view over here, using that steep line over here of when we're seeing some type of resumption above. But I feel like this is all no man's land. I'm looking for that horizontal support with y'all. And then I have, so let me figure that out by doing it like this and follow my mouse horizontally. I'm looking for where right around there, just below 96, right? Below this last touch over here. Let's draw a little line in right over here. This last local high. Getting above there, then at that point, I think that the bullish bias has returned, although in no man's land. And even though in no man's land, since we're in such a strong uptrend, a bullish bias in no man's land, and then getting somewhere above here, that's when we would be looking at oil going on a really strong run, potentially moving up towards those yearly highs. Bullish on chickens. Best investment of 2022 would have been chickens. All right. So what else? The 10-year I want to look into before we get into Bitcoin, Ethereum, some moving stop losses and things of that nature. Let's take a look here at the 10-year moving back in towards our yellow line, confirming that breakdown for the next move down. So price right now, breakdown, retest, right? And it's coming in for the retest. It's a big and pivotal moment. Some people out there, if I were bearish on the markets, I would be saying, oh well, the CPI came in a little softer. And that means that rate hike expectations for September came plummeting down. Well, why is the 10-year rising? Well, I don't know what others people's expectations are, but my expectations are right now, off of the current data we have, that we see a 50 basis point hike in September, that we see another 25 basis points hike likely in November, and then maybe even into December. So I see rates going up, even though this might potentially be the peak over here for now, right? In the future, will that be taken out? Likely. But for now, that looks like the peak in term, near term, whatever you want to call it. So does it make sense that markets tend to overreact both ways? Was this a bit of overreaction and is price right now trying to find its mean? I think so. Similar to oil, right? Very similar to oil in so much as that we really got to get above this area to be looking at any type of potential move taking us back towards higher yields over there. To manage your risk against, purely technical point to buy bonds against that line. To manage your risk against or sell if the line is broken. So, great questions. Let's start over here. And as you all know, like this was the entry, right? And we did this definitely in real time. That was coming off of one sell impulse over here, another over here. This is the third one, right? This was the money one. And, you know, if you are, Michelle, like that's the one that you got to hold, right? As far as trying to buy bonds down over here, why the Fed, I don't know that from a risk to reward basis that it doesn't seem to be there at all right now. Now, yeah, it just doesn't seem that this is like we talk about often. It's a very important lesson, right? Jim Rogers, I wait until there's money, you know, sitting on the other side of the room in the corner, and then I go over there and pick it up. I feel like right now trying to take a trade here on bonds is not like seeing money in the corner and going over to pick it up. I feel like it's trying to force something that's also over here in this like area of like no man's land. Yeah. So I would stand aside. It doesn't seem clear. We're looking for things that are clear. All right. So now, what happens if you see a resumption off? You're coming in now, breakdown, retest, resumption off. You know, is that the place to go ahead and take a position? Michelle, honestly, and using this as an opportunity, we're students of the markets each and every day, looking to learn from the markets, from the lessons it's presenting us, and then using that as our cumulative knowledge continues to grow and compound to become better and better. If you indeed took and held an entry from over here, coming off of two small losses, and you held this entry over here, and then you see price come over here and break down, right? And then get the retest and then the resumption. Can't move the mouse over there. Sorry about that. And then see the resumption down. As moving a stop loss over here from this trade over here, that makes a lot of sense. I don't personally see the reentry over here. Now, anytime that I'm looking at the charts, discussing price with you, going over TA, if that helps you see something clearer, whether or not it aligns with my own view, well, then we're doing our job. It's not that you should be or lining up your own opinions with my own, only using the work we do together to help you go ahead and be sharper and stronger out there. And we also have Hamid's view over here of the 10-year. I think it's fantastic. We have over here, first of all, this is looking at the monthly. And then we also have over here the weekly. So I thought there's the weekly. Oh, here it is. And then the weekly. So let me start over here with the monthly just to give us that bigger perspective. And we see this massive channel that everyone was following. And then the breakout. And if you're looking at it from this vantage point, this looks nothing more than like a retest into that line. I said I love his TA. You can see the yellow line over here on the upside, right? A resumption above there, right? That could be and spell trouble, even potentially going towards the top of this range, right? Now, no one has a crystal ball, and it's anyone's guess what inflation looks like 3 months from now, 6 months from now. And it's quite possibly that when we say that for the near term, we're talking about 30 to 90 days in front of us. When we say intermediate term, we're talking then about like 3 to 9 months, right? And we don't know how long potentially this intermediate near term peak inflation could last. And it's quite possible we start seeing, we'll watch it through food and energy mainly. We see that housing rents starting to come off. We talk about Game of Trades does a great job. Peter does a great job of talking about how usually that deflationary forces are stronger on the downside than the inflationary forces on the upside. But it's always better to be like zen and open and just be like following what's happening instead of forming biases that get you in trouble. So we're open to everything. And one of those things that we're open to while we're watching price roll over in real time is that it could then fade back upwards and quickly, right? So let me just jump over to the weekly over here. You can see that beautiful, look at this TA. You can see that beautiful retest, right, of this downward sloping channel. And then we're bouncing up. Where are we at in real time? 2.8. Yep, it's perfect. There's the retest. Now we're bouncing right up. And let me come back over here. And where does that put us? You know, I'm thinking out loud over here and asking, where does that put us? And look at this line over here, though. From over here, right, to that retest over here, right? And look at that sloping up. That looks really, really neat. How do I replicate that? That's from over this line over here, right? Is that correct? Yep, beginning of June. Look at that. So as long as we're above this line, this is like similar to becoming the new yellow line on the downside. For any type of further buying of bonds, yields coming off, I think that you would need to be able to see this line breached here on the downside. And I think right now we are in no man's land. All right. Absolutely, Michelle. The 100%, you're all about it. That's what all these lines are for. They're for managing your risk off of, for minimizing your risk. And anytime you're coming into it, if you see a move off, that looks like the time to go ahead and do it. But taking it further, going back towards CTM 1.0, that's looking at a multitude of currency pairs, trying to find out when you get a wave of setups, which is the best setup that you want to ride. Where do you want to deploy that precious capital? In this case, this may be a sign saying, well, it's just not the I could manage my risk real well, but is this the opportunity that I'm waiting for? And you never know until afterwards, but you got like a surfer who's reading the horizon, you have to get better at distinguishing, well, which is the wave that I do want to attempt to ride. And like a surfer, you never know, but you get better and better at picking the right ones. All right, let's continue here. I want to go back and, US dollar, Japanese yen. You know that I've been away for a couple of weeks. This was that most of you, the majority of you, watch these sessions day in and day out. So I feel like that you're able to pick off where we left off. If you are new or if you haven't, that you know that over here where that green dot is, that's where we lined up that sell impulse. This is a point in time where everyone was really, really, really bullish on the dollar. They were really, really bearish on the yen, talking about the Bank of Japan losing control. And, you know, we kind of look at the markets our own way. It's not exactly as we saw it. And then you could see first double black diamond sell impulse coming over here. And then the breach of the green line over here was the conservative breakdown. And what you saw is that breakdown, retest, horizontal, retest right there, and then a resumption down. Big, big move. Where are we now? I'm looking right now, what would be, that's a pretty big move. You also see it came down towards this area of support, confirmed it. Above, like right now, I feel like you're back in no man's land. There's no edge over here. What about to the upside? What potentially would cause the DXY to start its resumption upwards, right? So let's throw in a trend line like this. Yeah, that's going to be important. Seeing this trend line break out to the upside, that might be a sense or a signal of DXY strength coming into the market, that resumption of that dollar bid. By the way, and one thing that could cause that would be what? Continued rising yields in the U.S. Other thing I wanted to say was DXY main component is the euro, 57% weighted towards the euro. Next biggest component is the Japanese yen. That's why we're going to be continue watching on that. What about when do we see a continue leg down? This is not going to be pretty, so I'm not going to keep it here. But we have that horizontal area that was just confirmed over here, right? So how I lined that up was definitely off what the market's paying attention to right now. But then I went back over here till we had the breakout, the retest. That's the two things I'm lining it up off of because it is fuzzy over here, right? So that's why I did and why I did it. And then what do I see? Well, I see a descending triangle over here. Yeah, it's very clear to me. And until we break out or down, I would say now you've entered into no man's land. Euro US dollar, that other component, let's check it out over here and see what's going on. And you could see that right at parity where everyone, dollars going, Euro US dollar going to 80 cents now, and market's not straight up, straight down. I'm looking now for where we could see we're into resistance, pretty big resistance here. I'm going to try to draw this as best as I can right now and fighting with it right now. I don't know how clean that is, how good that is. I'm just going to clone this off there, and I think it should touch these two peaks over here, the peak here and the peak there. That's where we're going to keep this for now. So Euro US dollar into resistance, not just that trend line resistance. It's also into that horizontal resistance area. And it would be quite reasonable to see price at this point into that resistance roll back over. And that could happen very quickly. I think that, again, this is probably the easiest way for us to know because into that resistance, price could come back down over here, all right, until it either breaks out or breaks down, right? At this point into that resistance, you're just on the side. But that's beautiful. And then let's check out the DXY while we're at it. We've had that major breakdown of the dollar. We looked at that here together yesterday. Since then, you saw the breakdown, intraday session, our retest, and now seeing if it could resume off. A resumption is going to be below that breakdown area, and that would be a sign of further weakness coming in the dollar. And there it is. Let's take a look now over at Bitcoin. We had an entry yesterday evening on Bitcoin, right? That currently holding a couple of percent of profit. one of the things, we got a really good session today, a lot to cover, a big adjustment yesterday. You know that they're far and few between on the short side on Bitcoin. It's actually tremendous. It's tremendous in so much that now if you look at Ethereum with no leverage, this is going back just to 2020. So you're talking a 1,500% return with a 30% drawdown. Now with Bitcoin and the updated preferred settings, again, there have been very few updates. We are always looking to improve. At the same time, we're very methodical and thoughtful about any changes that we are making and or made. Yesterday, we had a big change. It was the inclusion of preferred settings update on the short side, the sell side of Bitcoin. I will be sending out regular monthly videos, including all updates, any updates or things that we are working on here at CTM for those of us that are following from afar with that new update. And then if you saw in yesterday's session, if you add light leverage to the Bitcoin, and when I say light leverage, I'm talking in this case 1.25 times leverage. If you add light leverage, all of a sudden you're looking at Bitcoin actually in sync with Ethereum's no leverage. Here you have 1,400 with a 29% drawdown, also from 2020. It's a huge, huge accomplishment. Not that any type of leverage is needed whatsoever. There's not. I mean, you take away the leverage just so everyone gets a sense of what that looks like. And just so you could see, without any leverage, you're still looking at extraordinary returns. Notice the drawdown, less than 24%. This is since 2020. We know that market participants experienced in 2020 a 63% drawdown in March 2020. And then in June into July of 2021, a 55% drawdown. Buying and holding since then, you're looking at what's that return? 238% compared to 873%. No leverage is needed whatsoever. When we talk about leverage, we're talking about that in terms of lightly leveraged. And again, that's 1.25% that is needed is lightly leveraged to understand all the risks involved before doing anything like deploying any type of leverage. It's not needed. It's not needed at all. Beautiful work session. Beautiful day. I'll see you all tomorrow. Have a beautiful day, everyone.